would you like me to do now?
Just a second.
Okay. Am I going to be on video?
No,
Okay.
I'm not on video, but the mic is on.
Got it.
All right, looks like it's live.
All right. Hi, everyone.
All right, so doing a review on the past week. Let's see. Till today. All right. Yeah, good week. I didn't have one loss except for testing out something on XRP with the magic keys. But other than that, only actually executed 2 trades. I definitely saw some other trades, just did not execute on them. So yeah, that's something going into next week that I will be. Well, so I guess next week I have. I'm supposed to. I'm supposed to make 5% by. 5% by the 31st of January or the 1st of February. So that way I can get the 5% profit target with FTMO, and then I'll be able to extend the challenge for another 2 weeks. So let's see. Yeah, tomorrow's the 29th. So I basically have 3 days to make one more percent. So I'll just be looking for a clean move probably next week that I can take advantage on, get 1% and get out, and then kind of take some pressure off, and then just have the extension for another 2 weeks. So first trade here was gold. Actually, don't know if you did. You might not have known that you can do this, but hold on, I'm actually going to change this color because this is. Oh, that's fine. Okay. You can actually take the trade down here on MetaTrader, and you can drag it onto the chart, and it will pop up with where you took the trade.
Oh, that's cool.
Yeah. So yeah. So this trade was taken on the 25th. Today's the 28th. So Friday, Thursday, Wednesday. So this was taken on a Wednesday. I definitely. I don't want to go over every single move that I feel like I missed, but maybe I'll touch on that here in a second. So, yeah, this trade was taken on the break of this low, more than likely. I think a few different reasons I was taking this trade was because I think really it came from the 1 hour, if I remember correctly. Yeah, primarily just on the 1 hour. Oh, where'd it go? Oh, right here. Yeah, so I took this trade based off of the 1 hour because, and I think even the 30-minute, if I remember correctly, there was a support that we had broken below. Yep, closed below. Yeah, so I remember this. I had marked this support, and I knew that if we could get a candle to close below this area here, that we should eventually have price continue down, maybe to fill this range here. So this was about if price closed below here, from here to here, about 100 pip range. So I knew we had enough range to go through. I didn't execute on a trade here. I was, it's funny. I was actually sitting here thinking, okay, so this trade, or this candle. This candle right here did not close below it. It wicked down, and I thought about taking an impulse trade because I saw that this candle had broken this low over here, and I was like, okay, well, what are the chances that price might continue going down? And I thought it probably could. I didn't want to take the trade because I think the 15-minute was showing, like it had shown, yeah, that price had closed below the 15-minute level of support. I definitely could have taken this trade because that would have went like 12 pips and I would have probably gotten out. I just didn't feel comfortable with the fact that the 30-minute hadn't closed yet. Gosh, where'd this go? That the 30-minute hadn't closed yet because I noticed sometimes that so like this is where the 15-minute level of support was at, but there was a 30-minute level of support here, and I know that the higher time frames are usually more effective, or just like they're a lot stronger. So I wanted to see if we could get a closure below the 30-minute, below this 30-minute level. And if we could get that, then I was willing to take the sell. But we didn't. It closed back above the range. Next one closed below, but it never broke the low of the previous candle. This support that formed here, this little minor level of support, once price broke this candle's low, I was really thinking about taking the trade. I think I hesitated because I think when I look at the 15-minute, yeah, I had seen that this is really where my entry should have been. We formed, let me get rid of this crap. So just by looking at the 15-minute, we have this support and we have this resistance, and price had made a huge impulse move down. Like this is a big move down. This move was from here to here, yeah, almost 100 pips. So I knew it was pretty unlikely that we would just correct that whole move right away. So I was anticipating that if we could get something to close below here, that price would likely continue going further down. But I did not take the sell based off of the break, because the 30-minute, yeah, the 30-minute was right at that support. So really, I didn't take it on the break of this. But what I should have done was I should have taken it on the break of this candle, because we know from higher time frame that price closed below, this candle closed below support. We formed a level, we kind of retested this level of support right here that we broke below with this candle, and it did not close back above the range, so it stayed below this support. And then as soon as the candle broke the next low, right, price makes, you can ask me questions, babe, by the way.
Oh, okay.
Price makes higher highs, or price makes lower lows, lower highs in downtrend. And so that's what we see here. We have price that made a high, a low, higher low, and then a low, right? So if price breaks this low right here, then that means we're in a downtrend, right? Like just understanding regular market structure. Mm-hmm. So right there, with these confluences, we closed below support. We retested the support. We didn't close back above. We closed with a weak bullish candle, which means there's weak bullish volume.
So that red candle, the second red candle, it closed below.
This one right here.
It wasn't above. It closed below.
Correct. Yeah, it closed below this support to the left-hand side.
Got it. Okay, so it didn't go from here
Don't touch my
up.
screen.
Yeah, I won't. It didn't go from here up here and close here. It went from here, but it went down here and then closed here. Or where did it close?
It opened here,
Right.
came down here,
Uh-huh.
closed right here.
Okay, and then that second red one.
Opened here,
Mm-hmm.
came down here,
Mm-hmm.
closed here.
Okay, and since it broke that line, that's how you knew you could go in for a downtrend.
Well, the candle closed below the
Mm-hmm.
level of support.
Meaning you can go in for a sell.
Not immediately. I could take it just off of it closing. and I probably could be okay, but I'm looking for confirmation of like, okay, because you have to look like this candle right here had a big wick to the downside. So on, like when candles form, this, if it's bearish, if the candle is bearish and there's a big wick to the downside, then that means that price went down here, couldn't stay down here. So when it got pushed all the way back up, this is where it closed.
Because they couldn't find any buyers down there.
Exactly. So what we're looking at is, no, well, that means that actually that they found a lot of buyers down here because the buyers pushed price back up to this point.
Got it. Okay.
Okay. So that means that for price to go, these bearish candles have big wicks to the bottom, which means maybe they're finding some type of support. Okay, so they're rejecting. Because remember, this wick over here, what this big wick over here means is that this is a rejection area. So prices, unless we can get some price to close below it, below this level of support, then it's, price may reject. So in addition to that 30-minute level, there was a 1 hour level, and the 1 hour closed below that level of support. And then we have clean range to the left hand side once price breaks that wick. See how it's just see how this candle right here is just clean? There's no wicks in it. So if price breaks this wick right here, price should continue further.
So basically it did break that. And then you can just know there, okay, well, it's bound to go down.
The probability of it going down is higher than not.
Right.
So
but
you can't say it's bound to, but
it wouldn't have been able to go any lower than that green wick, right? The bottom of the wick.
It could potentially.
But then as soon as it hits the bottom of the wick, it would shoot back up.
No,
because
not always.
It?
Not always.
Oh, okay.
If there's enough volume, it could push price all the way through it.
Got it. Okay.
So, again, 1 hour candle closed bearish below the level of support. 30-minute candle closed below the level of support. Then we had a retest of that support that it broke. We closed with a weak bullish candle, which means that there's not a whole lot of bullish volume.
Right.
Now the next candle, the main reason I should have taken it right here instead of waiting until like down here was that, again, we're back to this downtrend example. If price breaks that low of the downtrend, it should continue going down, right? Lower lows, lower highs, lower lows. That's just what it should do. So if price breaks this low, it should continue going down, right? With confirmations. This was the setup saying, hey, we closed below this. Here's extra confirmation saying that we couldn't close back above it. Now we're breaking the low, like on this example. So I should have taken a trade here. And another reason I should have taken it right here, which I was kicking myself after I didn't take it because I was sitting there like, damn, how did I not see this, dude? This candle formed with no wick at the top. This bearish candle. And if a bearish candle has no wick at the top, that means that bearish candle has so much volume that it didn't even push up. Which means it's a very, very strong bearish candle. So I should have just taken it right there. And if I did, I would have had 10 pips really quickly because it moved super fast. But, here if I did hold it, at least for this 30 minutes, it would have been 27, 47 pips max.
Okay, and then you look at the 4 hour, the 1 hour, and the 30 and 15 the most?
So I get my biases from the daily, the 4 hour, and sometimes the 1 hour, depending on how messy the higher time frames are. If the higher time frame of daily and 4 hour are messy, then I might get my bias from the 1 hour. But
and then which one is the one that you're like when you're about to make a trade, you're like Which time frame would be the one that you really decide on?
I like to enter on the 30 and the 15 minute.
Okay.
Shoot, recently this week I think I was looking at the 5 minute even a little bit, just for like entry.
And so if you see on the 5 minute, okay, so if you see on the 5 minute, the 1 hour, and the 30 minute, and the 4 hour, and they're all like breaking support, that's when you know you can go in, or do they all?
Yeah, no, that's a really, really good setup. Like when the daily, the 4 hour, the 1 hour, 30 minute, 15, when they're all going the same direction, like if all those candles are bearish
Mm-hmm.
and there's a setup, that's a freaking really high probability trade. Like
Do you
those
see
ones
those a lot?
I saw a few of them this week, yeah.
Okay.
The EJ trade that I took might have even been that one. But so my entry price was 1929.44. So 1929.44. Oh. Okay. Yeah, so like I entered right about here.
So
So
on the red candle.
yes, on the bearish candle. So I didn't enter right here, which is where I wanted to enter, but I was late to it. I was late to the party.
Okay.
But I saw that it was pushing down.
Mm-hmm.
I may have even entered on the 5 minute. I saw price pushing down. Right, remember I said I should have probably taken my sell here. I saw that it was pushing down and I was like, you know what, bro? Like, I should be able to get 10 pips out of this at this point. I think even looking at the 5 minute, I was like, still okay with the entry a little bit. Oh. Dude, how does it do this? Oh, yeah. Yeah, this is exactly why I entered on the 5 minute. This is actually the night that I came upstairs and it took
And
me
you got
like,
it in like 5 minutes.
because, so remember I missed my entry up here by that support that I wanted to take.
Mm-hmm.
And I saw the 5 minute, let me delete all this so this
Yeah, I
doesn't like
remember
mess
you
up your eye.
downstairs saying, "Oh, I'm seeing a setup."
Yeah. So price formed. This is because you have to understand, like as price was forming, there was a support right here.
Okay.
Okay. Price closed below the support. Price closed below this level of support right here.
Right.
But then the next candle closed back above it.
So you wanted to wait until that one.
Until something broke this low.
Got it.
And as soon as it broke the low, you can see my little red trigger right here.
Okay.
So I entered the sell, got 10 pips, like within a matter of seconds, and I was just like, I'm out.
So in a sense, you
that was
could
actually a good
have-
trade.
Yeah, so in a sense you could have entered the trade higher, but you wanted to see, okay, is it gonna break that some more?
No. I should have taken it off of the 30 minute, but I hesitated, so I didn't take it. So like I should have taken it right here, on the break of this low right here.
Okay, one more question.
Mm-hmm.
As soon as the candle closes and you're like, okay, the next one I'm gonna go in on a trade, how long do you wait before you're like, okay, I'm gonna buy or sell? Like, is it automatic when you go into the next candle that you're like, buy or sell or whatever you choose to do? Or do you wait a little bit?
It depends on how, like if it breaks a low or a high, so like, remember I missed the trade on the 30 minute. So what I was doing on the 5 minute was I was like, okay, if I really believe price is going to continue down, which at that point I actually do think that all of the time frames were pushing down. Piece of crap, dude. It wasn't just. Okay, yeah. So look at where my trade was taken up here.
Mm-hmm.
If my trade was taken here, this candle closed bullish, but at some point this was where it opened. So when I took the trade here, the candle was actually bearish.
What time frame is this?
This is the daily.
Okay.
The candle was actually bearish because remember it opened here, pushed down here,
Pushed down.
couldn't stay down, so, but it came up here and then closed up here.
Okay.
But it was pushing bearish when I took it. The 4-hour candle was bearish. The 1-hour candle was bearish.
So really, you wouldn't go off the day, the daily. You would look at all the shorter time frames
Well,
because the daily was bullish.
no, it was bearish. At the time when I was taking the trade, the
Oh,
daily candle was
oh,
bearish
it's just showing bullish right now.
because it
Got
closed
it.
bullish.
Okay, that makes sense.
But at the time when I took the trade, when it was open, the candle was currently bearish.
Got it.
So daily was bearish, 4 hours bearish. The 1 hour was bearish. So literally every single time frame was bearish.
Okay.
All I was waiting for was to say like, okay, I missed my first entry. Let me see if I can find a second entry if it makes sense.
Mm-hmm.
You know, I don't want to just like take a trade just because I think I can get in on it. This trade made sense because again, all the other higher time frames were bullish
And okay,
or bearish, sorry.
you're fine. So you're saying that your first entry point would have been over there.
It would have been like up here somewhere. Yeah. On the 30-minute time frame. But this we're looking at the 5-minute time frame right now. So the 30-minute looked like this. I wanted to take it like right up here. So let me just mark this off. Like I wanted to take it like right here.
Okay, hold on. Let me just look at that. So you wanted to take it there because it closed below. Where did that go? Okay, it closed below.
Closed below support. Retested
But
that
where
support.
did you take it instead?
I took it somewhere around right here.
Got it. Okay, and the reason you took it there is because you ended up.
I missed the first one, the first opportunity to enter a sell here.
Mm-hmm. And so you.
I went down to the smaller time frames to see if I could find a different place to enter the trade that I already missed.
Okay. And how long did it take for that candle to close?
The candle that I entered on?
Yeah.
Oh, well, this is a 5-minute candle, so it took
Okay.
5 minutes.
Got it.
But as soon as I saw that price went up and made a wick and then came down and broke this low, I was like, let me just enter. You know, and then again, caught 10 pips and I was out.
Okay, and then why if you. Okay. So if you saw your setup, you missed the entry.
The first one on the 30
Right.
minute.
The first one. Why wouldn't. And this is just how I've traded in the past, which I know is probably not smart, and you've done a lot more due diligence in this area. But if I see something and I'm like, oh, it's definitely about to go down, and I see that I could have gone in there, I guess I've never looked for other setups. I'm just like, okay, it's going down, so I'm just going to go in. What is your analysis on like why you wouldn't just go in if you know it's going down? Because you saw the setup, so why wouldn't you just, all right, like I'm just going to pull the trigger?
You mean even if I missed it?
Yeah.
Like, why wouldn't I?
Yeah.
Um,
Because that's how I've traded in the past, so I just want to understand that.
yeah, I just don't want to get a bad entry. Like,
Why would it be a bad entry if you're seeing it going down?
well, sometimes the thing is like when price runs like really quickly, the worse, the further away it gets from where you originally wanted to enter.
Mm-hmm.
So like on the 30 minute, the further that price gets away from this point, like the further it down it moves,
Mm-hmm.
the more likely it is to retrace. Like I know it's hard to understand, like, because the thing is it's still supposed to go down, right? Like the
Mm-hmm.
chances of it going down are much higher. But like for instance, we could say that this candle closed below support. Like look at this one. This one closed below this level of support right here.
Mm-hmm.
But you see how far away it went from the level of support. So the more likely it is to retrace at some point. So with this one, it was still near support, so I should have been more okay to take that trade. I just didn't want to enter like right here and have price reject on me because look see these wicks right here?
Yeah.
All these wicks right here?
Mm-hmm.
That means price rejected that area and had trouble closing below it.
Right.
So I wanted to, since I missed this first one, I was like, well, maybe it's not the worst thing to wait and see if whether or not we can actually get something to close below this level.
Mm-hmm.
Um, yeah, and I've only recently started mixing in the 5 minute because gold is moving so quickly at times that sometimes the candles are so large that it just doesn't make sense to enter on like a 1 hour candle.
So, back to that question, the reason why you don't go in until you see like another setup is because of the retracing. Like, because you don't want your
Only
stop
on this
loss to be
example.
hit.
Only on this example. Normally,
Okay.
I want to execute on the first setup that I saw.
Right, right, right. But the reason why you didn't is because
I
of the
hesitated.
retrace.
No, because I hesitated. It was just mental. Like,
Oh, okay.
I just hesitated on taking the entry, and so since I didn't take it, I just was like, well, I still think it's going to go down, so let me see if I can find an entry on the lower time frames to get in on the push down. Because the 30-minute candle's pushing down, but that means that the lower time frames, like the 15 or the 5 minute, may present an opportunity to get in on the 30-minute candle pushing down.
I guess that's the part that I don't understand. Because, like, for me, if I would have seen an entry and know that it's going down, I would just get in, like, regardless of finding an entry point. And I know that that's probably not smart. I just, if I see that it's going down, I'm gonna pull the trigger.
Yeah, well, yeah, that's the thing is like, I mean, I could say, okay, I think this candle's going to go up and just enter at any random time, and then results end up not being consistent. You just like are entering because of what? Like what made you enter? As long as you
Because I
have,
saw the entry point. Like, if I saw the first entry point, I mistakenly missed it, but I see that it's going down, I'm just gonna go in and then pull out when I get the 10 pips. Or however many. I don't know. I guess I'm just trying to, like, understand the background of why I shouldn't just go in. And that light's really bright, so
Yeah.
I keep trying to.
well, I think you would discover the reason why you don't just go in if you kept trying to go in.
But I would have made something from it.
You would have if you were able to see the setup and understand your time frames and yeah.
Okay.
I mean, that's the good thing about trading is people see things a little differently sometimes, you know?
Mm-hmm.
So that's just me personally.
Yeah. So. Okay.
Oh,
Whoops. Did you stop it?
no. Okay, second trade was on EJ. What is happening? All right. Man, there's so many opportunities this week that I was like, dang. So this one was on Thursday. And this one was actually decent.
Wow. That's good.
Yeah, so I think we'll just start with looking at the daily time frame. So trade was taken here on this candle. Price opened up right here. This is where the trade was taken. So I believe I took this trade because I saw the daily candle flipping bullish. So what I mean by flipping bullish is price had gone down, came back up, and then finally the candle started to flip and turn green. So daily candle was moving bullish. 4-hour candle was moving bullish. We broke above this high right here, and we had a clean candle to the left hand side. So I knew I was in a good range. Even looking at the 1-hour, the 1-hour had that exact same resistance. Clean candles to the left hand side, right? So again, if price closes above this resistance, price should more than likely continue to go up. Okay. So again, daily candle's bullish. The 4-hour candle was bullish. This 1-hour candle where I entered was bullish. I think I originally wanted to enter somewhere down here on the 30-minute. I had seen this move. Again, didn't take it. But I saw this resistance right here. And I saw that this candle closed above resistance. We could fill this wick. Price could come up and fill this range, and then with enough volume continue on to here and maybe even further if we break above this resistance.
So it was when that.
So price closed above, right? And thank God I did not, because if I took a trade on the buy, like on the break of this candle right here, the break of this high, and I set my stop loss below this candle, I would have been taken out by this next candle. I was also thinking about potentially getting in here because price retested that level of resistance that we broke. But look, this candle could not close below this resistance. So this one closed above. This one tried to come down and break below, but it couldn't close below the support or the resistance again. So now I know if the candle breaks the high, we should be able to continue up. So I wanted to take the trade there. I didn't. It doesn't matter. But the 30-minute candle on this resistance over here did close above. I think I even wanted to take a trade on the 15-minute at some point. Yeah, that would have been a great setup if I had taken it here. Oh well. Just real quick, because this was this is the 15-minute time frame. This was the first 15-minute yes, this was the very last 15-minute candle of the hour. So as soon as price made a wick down to the bottom and broke that high, I should have just entered there. I wanted to, again, I just didn't. Now this, I remember this was taken off of the 15-minute, maybe even the 5-minute. And let's go back to this. Oh yeah, I definitely took this off of the 15-minute. Yep. And thank goodness I got out quickly, because look, I got out and price just like reversed basically the next candle. So here's my thought process here. Okay, remember 30-minute candle closed above resistance, but this is the 15-minute time frame. At some point, the 15-minute candle came back and closed below the resistance, which means it couldn't stay above it. So normally, if price ever does a fake out move where price closes above resistance and then comes back and closes back inside of resistance, the next candle has to break the low, and if it breaks the low, then it should continue back in the range. But it didn't break the low, and it came up and broke the high of this bullish candle. So this is an uptrend. Higher highs, higher lows. So what price did was it made a high, made a low, broke the high, just like this. It broke the high, like right here. So price should continue back up, because remember, Price did not break the low. It respected the low. And on top of that, the bullish candle opened with no wick, which means it didn't even push down at all. So it had so much bullish volume that it didn't even make a lower wick. It broke the high. Price should continue going up. It's just what it was. So I took the trade, and hallelujah, I got out like right at the top of the candle.
Yeah, nice. That's good.
So those were the two trades I took this week. I definitely remember seeing a couple other opportunities that I didn't take. I think they were like earlier in the week. I think I remember kicking myself about one or two of these.
Yeah, those look like
Yeah.
some good ones. Wow.
Yeah. Oh no, this one was the one that I wanted to take.
That would have been.
Price breaking below this support here.
Wow.
I wanted to take one of these, and I just,
Yeah, that's a heavy.
hesitated because I thought maybe what I originally thought was that price was in an uptrend and price was just consolidating. So I thought maybe price would continue up, but it didn't. And
That's a heavy drop.
yeah.
That's okay. There will be more.
Mm-hmm.
There always is. Wow. What hour is that?
No, that's the 4 hour.
Wow.
Yeah, so I only took 2 trades this week. I know that on gold there were a few other trades I definitely wanted to take, but again, just did not execute. So yeah, is what it is. But next week, looking to kind of be patient, I guess, because now I only have to make 1% to secure the extension. So I've got 3 days to do it. So all I need is one good setup and 10 pips.
Yeah, you got it. It's good.
All right. Yeah, so ended the week with almost 2%, but just a little shy because I think commissions on the trades. Yeah, and there were a couple trades where I cut it a little short before 10 pips. So, yep, but we'll see what happens next week. So, all right.